Hello, this is Raquel. Don't forget to like, share, subscribe. So, we're going to talk about insurance, life insurance, and how it plays as a powerful tool in estate planning. So, we know that term life insurance is like car insurance, right? You don't get anything unless you put in a claim. And if the term life insurance ends at age 80, right? Let's say it ends at age 80, and you transition at 81, then your beneficiaries would not have attained the benefits of your sacrifice, right? So we recommend that when one is going to use life insurance as a tool, that one chooses a permanent or whole life for the whole life of the person. And it comes with perks like cash value, right? But you can speak to your insurance agent how to navigate those waters. So, when you have a life insurance, right? I like to tell my clients that instead of making the beneficiary a person, make the beneficiary a trust, and then the trustee can then pay off the mortgage on the properties and then distribute the proceeds as per the direction of the grantor or the settlor, right? And so don't forget, it all depends on the main purpose of your trust. If you should choose a revocable trust or a revocable trust. And so if your purpose of having a trust is just to avoid probate and you're not concerned about estate taxes because your assets have not reached the threshold, like let's say New York 6.94 mil, right? So depending on your state, each state has its own exemption for estate taxes. Some states have no estate taxes. Let's say Florida, for example, right? So if that is not your issue, and you know your assets are below the state exemption, then you can go ahead and you can by all means have a revocable trust, and the life insurance can be made out to the revocable trust, and then the trustee can proceed with doing what it is that you have directed. So keep in mind that there are 6 states that have inheritance taxes. Inheritance taxes, so you, the beneficiary, has inherited something from the grantor, you will pay inheritance tax. But there are only 6 states. I believe there are New Jersey, Pennsylvania, Maryland, Nebraska, Iowa, and Kentucky. And so I know Maryland for sure have inheritance and estate tax. So you want to meet with your attorney in your state, in your jurisdiction, and decipher if your particular state has inheritance tax or estate tax. Okay, so let's get back to life insurance. All right. If you have assets that are beyond that which the state required to be exempt, then you may want to think about getting an insurance policy that would protect you from those estate taxes, right? And so these are usually called irrevocable life insurance trust, and it's best to meet with a financial advisor or estate planning attorney in your jurisdiction, because it can become complex. There are IRS criteria that need to be considered when crafting that type of trust, right? And so there are some spouses that are not ex-spouses, and when they were married, they took out a life insurance policy on the spouse. So because you're divorced, you don't have to cancel that policy. I mean, I recommend that you keep the policy, so in case your ex should transition, you still get the proceeds from his or her life, because you are still the owner of the policy and your ex is the insured, right? But I hope these are the tips help someone, right? So please take care of yourself. the dog, the cat, the turtle, each other. And as they say, my native tongue. Later, yeah. Ciao, ciao.